Hello and good afternoon. I'm Richard Linton, the president of Kansas State University. And on behalf of Kansas State University, I'm honored to be the first to welcome you all to the Kansas State Risks and Profit Online, a mini conference for the Ukraine-Russian conflict and the agricultural ramifications. This is day 3 of a very productive workshop and conference. In fact, today there's over 1,000 people that have registered from over 40 countries. And as a formal academician and dean of a College of Agriculture and Life Sciences, I know how important this conversation is to all of us today. I wanted to specifically reach out and thank the Department of Agricultural Economics for leading this effort over the past week. In particular, for today's meeting, I'd like to thank Dr. Dan O'Brien and Dr. Glenn Tonsel for leading the effort. I hope that you have a great conference today and learn all that we can about this important issue. And with that, I'll say, go Cats.
Well, I appreciate the chance to speak with you on behalf of Kansas State University, the Department of Agricultural Economics. My part of this week's set of sessions is to talk about grain market impacts. I'm talking about Ukraine-Russia conflict impacts on grain markets. I'm going to focus on the wheat market first and foremost, and then follow with corn, and then a market that we may not be as aware of or as thoughtful about it from Kansas, although we have grown sunflowers in Kansas, still do, the sunflower and sunflower oil impact of the Ukraine conflict, Ukraine-Russia conflict in particular. Also, what's happening in sunflower and sunflower oil will have an effect, a secondary rollover effect onto the soybean and soybean oil market here in the United States. And then I want to finish up discussions of a little bit of comment on cash grain basis and bid issues that have come up here in Kansas, particularly in the last week or so, as we've had such volatile futures prices and a number of factors happening in the U.S. supply chain that have really played havoc with cash grain bids in the state and across the U.S. I thought first to kind of set the framework or the narrative of our discussion, I look at some recent headlines that have affected the grain markets. Can I give you an idea of just how broad and pervasive these impacts are? There's a out of Bloomberg on the 7th, wheat surges closer to record as war paralyzes Ukraine's supply. Another headline, EU wheat export demand surges as war disrupts Ukraine-Russia supply again. Key exporters, a headline came out of a news service, more Middle Eastern oriented. Key exporters not able to offset balance of Black Sea wheat. We're gonna talk about that very issue. EU may let farmers use fallow land as Ukraine war hits grain supply. We even had discussions of, to that degree as it was proposed that, gosh, maybe here in the US with what this situation is, maybe we need to look at CRP land usage. Argentina to control domestic wheat prices as Ukraine conflict heats up. This is probably the next shoe to drop with regard to where the markets may go or the actions that could be taken in terms of the potential rationing of the usage of some of these major crops. And this one caught my eye this morning. Tunisia pays about $500 a metric ton, which translates to about $13.61 per bushel for 125,000 metric tons of soft wheat. South American nations push to exclude fertilizer from Russia's sanctions. We've heard a lot about that in the news of late. Food crisis grows as spiraling prices spark export bans. Where some of these headlines are written in a bit of an attention-grabbing effort and mode, but still they're pointing at the issues. Here are a number of headlines that talk about Ukraine specifically. Ukrainian railways ready to boost grain exports by train. And keep track of that one, because that's to the western part of the nation. Ukraine to sow, this came out this morning, Ukraine to sow as many crops as possible this spring by the president, and also by Reuters. There was a discussion of them sowing more cereals in 2022 and to cut corn and sunflower seed production. Ukraine suspends exports of some agricultural goods. That was earlier in the week. Critical damage to Ukrainian seaports not detected. That's a big issue. Ukrainian farmers ask, plant or not to plant. Even if fighting stops, yields could suffer as input worries loom. Russian invasion of Ukraine resulting in deficit of sunflower oil on the world market. Big issue. We're going to talk about that some. I saw this article this morning that I thought provided a good framework for us to consider as we look at the situation in Ukraine. So this happens to be talking about some soybean processors, but some of their issues are particularly relevant to our discussion. The reality of the Ukrainian soybean market under conditions of war. So according to this APK Inform source, new reality brought by Russian invasion to Ukraine is forcing soybean crushers to choose between shutdown and adaptation to lack of transport and drivers, disruption of traditional trade flows, procurement problems, et cetera. Under such conditions, soybeans are processed mainly for domestic consumption. So they've turned domestic because of challenges in getting crops out of the country. And there's a lot in here. Our enterprise keeps on functioning, is a quote from them. We are processing soybean for domestic consumption. They talk about feedstock procurement issues, and that apparently there's disruption of their cash prices. Prices of soybeans are virtually absent, so they're working through intermediaries to be able to secure delivery. They have contracts signed to deliver oil to countries apparently to buyers outside the country, but they have delivery problems. They cannot find reliable transport. So they talk about activity on the market in the Western region, and farmers are willing to sell soybeans to generate cash, no doubt. However, the logistical factor prevents the normal functioning of the market. Many of their drivers have joined the army for the wartime fight. And this is a statement that this may be of importance to you. We talk about the livestock sector also facing problems in many regions as oil extraction plants partially suspended their activity, rising or increasing the shortage of protein feed. So problems upon problems. Just a quick reminder, this is what Alan had talked about on Monday, a map of Ukraine. Here from the New York Times, pardon me, is basically printed yesterday, was a map showing the areas of Ukraine that are occupied. Now keep track of that. Of course, the port regions are occupied. There's a lot of the ag production areas that are unoccupied at this time. Yet it's the logistical issues that are that are important to consider. And you can see, of course, the ports around the Black Sea region. Take note here for Ukraine wheat production. Winter wheat accounts for the vast majority of it, but note the season. Well, the location, of course, throughout the country, some to the west, a little more amenable to rail transportation, but a lot of it there in the east that would move to the ports in the normal mode. Pardon me. And note the season that right now we're, as we said in February, March, my understanding is they have a wheat crop that's in relatively good condition at this time, but it won't be harvested till they get out into July. So some of these same logistical issues we just talked about don't have to be dealt with yet, but they eventually will be. Corn production, we're just coming into the typical corn planting timeframe. In fact, I've seen reports that corn planting starts more like March 15th than April 1st. But anyway, with all the logistical challenges that they're facing right now, again, that comment we saw earlier about them getting needed inputs and having the ability to get the crop to the ground on the one hand, but having fuel and seed and fertilizer and whatever else are all in play. It raises questions about how much production either put in the ground or taken out will be able to absent a ceasefire and a dramatic change in the situation, we'll be able to how much production will we be able to get out? Will the world be able to get out of Ukraine this year? And you can see the crops that we're dealing with. Of course, corn. It had sizable year this in the year that we're in, 41.9 million metric tons, 33 million metric tons of wheat, mainly winter wheat. Sunflower seed, you can see they had a strong year also there, and then some barley as well. So I'm going to talk about the wheat markets. Thought it was important to look at what the futures are telling us right now for prices. In the red line, you can see the this type of seasonal average price pattern we've had for wheat in this 2021-22 marketing year that ends May 31st. Season average price of 778 would be a futures-based forecast. Then a forecast for the next year, taking strong futures prices, assuming current basis levels, actually assuming current relatively weakened basis levels, and projecting them out into next year, and you get a price of about 967. The USDA's latest forecast for the current marketing year, this came out on Wednesday, and the WASDE report was $7.50. So pretty close, but the Outlook Forum's projection, I think it was February 24th, 25th, came in with a forecast of wheat prices at $6.80. And of course, the futures are now looking at something more like 950 to 10. And in fairness to the USDA, they weren't aware or probably hesitant to factor in the things we're going to factor in today, and that the futures markets today factoring in and coming up with this forecast. So how is the U.S. wheat market situation affected by the Russia-Ukraine conflict? Well, production already taken out of the ground for winter wheat. This is for this current marketing year. We talked about last year's winter wheat and spring wheat supply, so that's unchanged. And food use, we don't see a lot of change there actually, unless perhaps feed use would be affected by gyrations in the corn market. Exports for this marketing year, actually, we've had a relatively slow pace. The USDA in their last report actually lowered the export figure down to 800 million bushel, but it'd be my thought that the shortfall of Ukraine not being in those markets next year probably would have an increasing impact, to increase U.S. exports in the coming year. And if U.S. exports are moving higher, then its usage increases and ending stocks will be tightened up. So U.S. farm price projected at $7.50 for this marketing year. For that next marketing year, I would probably be at odds with my own opinion of what the USDA said at $6.80. It looks like with stronger exports coming on, tighter stocks, that we'd see higher prices. So Ukraine-Russia impacts. You wonder about U.S. spring wheat seedings this year, if the high prices will impact what spring wheat acres that we plant this coming year. Of course, other crops have also increased in price, but you'd wonder about that. And come fall, if we see the type of prices that we're talking about, will that have an impact, a positive impact on winter wheat seedings? I've already talked about heading off into 22-23. It would seem that this situation would increase U.S. exports and support prices. On the world side, just a multiplicity of impacts. Production, it would seem that this year's the ability, it's not that the crop isn't in the ground, it is for this year, for 2022, but will we be able to harvest it? When I say we, it's almost a world community statement. Will that crop be able to be harvested, effectively marketed? So that 33 million, about 33 million metric tons, we'll assume that off into about that same amount of production potential is at risk going forward. Food use, with the tightening of world supplies, it's likely that we'll see some rationing of world food use. In fact, show you here in just a little bit that's probably will be a necessity. Now, not in an extreme amount, but I'll show you the the relationship between usage and ending stocks in just a minute. Exports, you know, the Ukraine's 20 to 24 million metric tons of exports will be missed. On the margin, that's about 25, 28% of world wheat exports in the most recent years. So you take that chunk out and you tighten up the situation for others. There's some other countries that are stepping in, and we'll talk about that, but still that 20 to 24 million metric tons, when you have about 200 for the world total, is a big deal. Ending stocks, tighter world stocks without Ukraine. So overall, you have to wonder, with the high prices that we have, not just in the US, but globally, if what this will spur in terms of increased wheat seedings at any chance for spring wheat, for winter wheat, that countries have in 2022. The question will be, for Ukraine, what will they do come this fall? Will they be able to seed? And that's all at risk. Increase in exports, India, Argentina, Australia, perhaps even the US, all are in position to increase their exports heading off into the rest of 2022 and on into 2023. Prices being supported, and really we have a systemic wheat price inflation going on right now in the world wheat market, driven by worries about adequate supplies, these factors we just looked at up above in that slide. So we're not seeing much to weaken the price prospects for wheat until we get on the other side of this situation and see world supplies reassert them, where world production and supply demand balances come back to the norm. So you can see the latest USDA figures for wheat. Russia, Ukraine, Kazakhstan for world production, that you're looking at this 2021-22 forecast, out of a total world production of 778.5 million metric tons. Russia is 75, but about 10%. Ukraine, 33, about 5%. Kazakhstan, right next door, affected by all these flows, about 1 or 2%. So pretty important. You do see India, China with their sizable supplies, India positioning itself to export. You see Australia and European Union stepping in, seeing export sales opportunities. So you've got movement and change right now in the world. When you look at world balances, world less Ukraine, and try to figure out what's the impact is on Ukraine not being basically taking 33 million metric tons out of world production. There you see the numbers, and I'm looking at more of a 22-23 marketing year mode on into the next year. So I'm showing an extreme outcome here where that supply just is not available. Now, hopefully that does not come about. And I'm also making the assumption here that there's no change in the initial assumption that there's no change in usage in the world. Exports, there's the downward adjustment, about 20 million metric tons of Ukraine not being available. And there's the impact on ending stocks. So 244 million metric tons, 31% stocks to use, and a multi-year low in stocks. You can see we haven't been down quite that low in terms of raw stocks for a while, but in terms of number of years, it's a 9-year low. So and really so that's an important issue. But really what I think the factor is that if the world sees fit to raise that number, that's uncomfortable with that low ending stocks, then the place they go is to ration usage. And so you take 10 million metric tons off of 787 million, and you put that on the ending stocks, it's 254, 20 million, 264. So that'll be the issue that we have. So it does seem that some price rationing of usage probably be necessary to keep stocks from getting too low. I also looked at this from a uh, uh, less China, less Ukraine point of view. And so you've got in this case, you end up take China out of this equation, you end up with about 108 million metric tons. It's a long-term 16-year low, very tight situation. And this rationing issue, you can take 20 million off of that, 20 million off of world usage outside of China, driven by higher prices. Then you put that, then that ending stocks figure becomes 128 instead of 108. So that's the type of mathematics I think we'll be looking at, type of calculations we'll be looking at as we try to navigate our way through a tight world situation. I did want to show where we're at price wise for wheat. It's such an important commodity. So you look at where we're currently at is about for this current year, 750 price, tight stocks, about 22% stocks to use for the world minus China. I think that's right. Yep, world less China. And we're at a 750 US price, adjust for currencies, about 870, about 860. And then that, if we end up and find ourselves moving below 20% stocks to use and moving towards $10 a bushel or so, then that's just a prime situation to try to put ourselves into some rationing of usage to try to avoid such a tight, worrisome situation in the world. Corn markets, I'll move a little quicker here now. You can see for corn that the current market price about 591 is what the futures would say, about 589 for the next marketing year. Current USDA projection for this year about 565, so in the ballpark. The USDA's conservative forecast is about $5 in pardon me, came out of the Outlook conference again about a month ago before a lot of this became so serious. So already the futures markets sharply higher in its expectation than what the USDA had said. Current situation, ethanol isn't so much affected by what's happening in Ukraine, but it is affected by what's happened in the oil markets. So likely an increase in ethanol market support from Russia oil limits, increased gasoline prices, bringing ethanol into that mode. Exports, the USDA in their most recent WASDE report, basically in a one-to-one statement said Ukraine's not in the market, so the U.S. exports will increase by about 75 million bushels. So that it was a one-to-one tie-in, strengthening U.S. corn price prospects. Feed residual, I don't know from Glenn's point of view that will see a direct impact on U.S. feed usage, but these other factors, by the time you add exports in, and they're likely the exports and ethanol going strong, then it's going to be strong cost competition from these other alternative corn uses, and that indirect effect will come in and affect feed use. I'd anticipate it. Farm price 565, and continued price strength as wheat strong. Corn has a carryover effect as well as soybean does. Ukraine-Russia impacts. You have to ask the question, given what's happened in the last several weeks, excuse me, does this change our expectation of U.S. corn plantings? It's very possible that it may. Our factor all along has been, do we have fertilizer to get the crop in the ground? So we'll see where all that goes, but like an increase in ethanol, likely increase in exports, decrease ending stocks, continued price support. And you can see that showing up in this most recent WASDE report that the positive changes made in usage expectations, ending stocks down, tighter stocks to use, price raised 20 cents. For the world, production, Ukraine's 42 million metric tons will be missed. Has an impact, a big sizable impact on the world market. Likely price rationing of feed use on the world market for corn exports. Ukraine's 27 to 33 million tons of exports will also be missed there. So you're looking at a tightening up of world stocks to use, ending stocks, tighter world stocks without Ukraine. The impacts, increased corn planting around the globe. Maybe in the US, we'll see increased exports from US, Brazil, Argentina, whoever, European Union, others that can raise corn. Again, Ukraine's not there. They were the fourth largest producer of corn in the world. And now that there's a gap, or at least a question as to whether they'll be able to get a crop in and what the crop will be this year. So prices, this is a similar statement to what had been said for wheat, a systemic feed grain price inflation in the world market. In fact, it's a systemic feed grain, wheat, and oil, systemic grain and oilseed price inflation seems to be what we're seeing right now. Did want to show you again the importance of corn production out of the former Soviet Union, Ukraine in particular. 41, there's that 42 million metric tons out of the total world amount. That doesn't seem so high, but their percentage of they export 80-90% of that. Argentina, Brazil. Brazil's crop is lower, the first crop from drought. Argentina affected some. European Union probably in a position in that part of the world to gain a lot. So let's take a look at this again for corn. So made an adjustment off of heading into 2022-23. If we don't have the Ukrainian corn crop, we assume again unchanged usage. Exports, there's the loss in Ukrainian exports showing up, and you see the world ending stocks falling to 269 million bushels. Doesn't seem quite as draconian as it did for wheat, but so it'd be a 10-year low. And again, price competition probably coming in and affecting usage. And again, it's a one-for-one trade in this mathematics, is in that if you lower usage, it goes on to stocks. So what does the world want for ending stocks after adjusting for the possibility of Ukraine not being able to produce? And from a world minus China point of view, you can see again a very, very tight situation, multi-year low, long-term low in terms of ending stocks. And again, this all that much more points towards probably some rationing of usage from high prices so that the world can figure out how to manage the tight stock situation. And just prices, as you look at them, it looks like, looking at historic economic relationships, if we're 565 this year, that at least if we go in the same direction we expect prices to go in response to tight stocks to use, that we're arguably about 50 cents higher in the coming year. Sunflower markets. Want to hit on these things. I want to give sunflowers their due need in that Ukraine sunflower seed production. You can see where a lot of it, right through that central heart of the country, but also in some areas that right now controlled by Russia. And just a startling impact on world sunflower production, 26% out of Ukraine, of percent oil of global exports, 44%. There's one statement made in reading about this that said that that if they lose all of Ukraine's sunflower oil production, that it can't, well, I don't want to say it can't be replaced, but you'll have to go to palm oil, to soybean oil, et cetera. But to lose 44% of the world's global sunflower exports, and this is a 2020, is a major thing. Put it in graphically and awfully serious. Just eyeballing, assuming no rationing, et cetera. If you just take it as it is, and you see a tremendous drop in world sunflower production as a result of what's going on if they're unable to get a sunflower crop out of Ukraine this year, and stocks in a sharp, dramatic manner dropping to basically to just sweeping out the bins at the end. So the soybean markets are affected by this. We did talk about that one example earlier. So obviously, a little more to the west, you see soybean production in Ukraine, and not as much of a world factor, et cetera. Did want to show that. So as far as soybean production, doesn't seem like there's much impact. And as far as our expectations of what the futures are showing for prices versus the USDA, they're really pretty close. So about right around 13.25. The USDA was at 12.75. The market's about 13.17. So really pretty close. Bigger issues to have to do in that I would wonder about is if this issue, if we have such a dramatic shortfall in Ukraine sunflower production, and the world has to look elsewhere for oil, then do we see an increase in U.S. soybean crush to produce soybean oil to try to compensate for that? By the way, with the shortfall in the South American soybean crop because of drought, we've already seen the USDA make an upward adjustment in their export figure. But here's the issue to look at. For U.S. soybean oil, even at the outset, early on, the USDA has already come in and started to increase their projection of soybean oil imports up to 1,625,000,000 pounds, up 200, and took the gain out of that out of biofuel, figuring that the demand pull will be on the export side. So already we're starting to see some change there. I just wanted to show this. We're seeing some tightening of world soybean stocks to use, but we'll see. Total usage could increase on this if probably where you'd wonder about the change coming is in total use. If on the soybean side through crush, we'll have to compensate for lost Ukraine sunflowers. Just wanted to show you I've got a number of charts showing the shortfall this year in soybean production in South America, and China is starting the move towards rationing, that they're anticipating importing less soybeans this year because of high prices. And just again, a strong situation with soybean prices this year at historic highs. By the time you add the currency differentials in, you really see a high soybean price. Okay, in the last few minutes, I want to talk about some recent cash grain basis issues that have occurred. Pulling from information that was in the trade, I just read it off. Spot hard red winter wheat basis bids in basically Southern Plains area were affected by sharply higher wheat prices occurring on Tuesday the 8th. Pulling this from some market reports. Grain dealers rolled their basis bids to sharply discounted deferred KC wheat contracts relative to higher volume May contracts. So we heard about this in that the basis bids were moved off the May contract on into July and September. Selected grain dealers were posting no bids, and this got everybody's attention for hard red winter wheat, citing current high wheat prices as the reason. So some millers had stepped out of the market, stopped accepting deliveries, basically with the idea that they were going to use their wheat inventories. It's a question of how many months worth of inventories do they have? Maybe they have a lot, but so that's what was stated. So it wasn't the 8th that caused all this. It was the 7th. On Monday the 7th, you can see what that market was like. Strong move to the higher side. And I see the upfronts, but I see especially September, December, March, 75, 80 some cents. And you've got the carry, those negative carries on a per month basis are showing a strongly inverted market. Now, yesterday, on Thursday the 10th, of course, we're in the deeper into the delivery period for that March contract, so it's in its convulsions of going off the board. But the May contract, 10.95, so down fully $1.50 plus from what happened on the 7th. And you can see the carries have muted a little bit, although when you get out into May 23rd, May 23 and July 23, there's some sharp discounts in that market. So wanted to show what at least an attempt to explain maybe what happened, at least as best I understand it. So we why was the market doing this? Sharp inverses in the wheat futures market, record high lead contract prices for lead futures with high volatility. In a way, they were saying if there was a fight, a historic fight where one of the fighters said no more, in his own language, said no more, and it seems that that's almost when in seeing that the volatility that came into the market, it's almost as if they said, okay, we're stepping out of this, and because of that, downstream supply chain disruptions were impacting grain elevators. So they had lack of bids from the people that were buying from them, wheat millers, exporters, etc. If those folks were out of the market, then the elevators followed suit. And also, Guy Allen and I were talking about this. Also, some in the supply chain gyrations we're going through, there were questions even about the availability of rail transportation. So if an elevator bought grain, they couldn't move it out. And furthermore, there weren't buyers on the other end if that in some cases. So I think if there's a ray of hope in this, it's that this brings about a necessary turnaround in the future. So eventually, these downstream buyers and users they'll need wheat supplies. Again, if the millers are using up their carryover, that can't last forever. So demand pull will force proactive bidding and procurement for wheat in these industries. When basically when inventories run short and buyers come calling. So that would be my thoughts on it. Let's stop share here a second. Let's turn to the chat and see if people have any questions.
We've got a few. Louise Emke is kind of the first one that I have. With higher wheat prices and lower production costs, will Western Kansas farmers grow less corn and milo and more wheat?
Louise, I need to give some thought that it is. I think it's instructive to see what we're hearing. What's going to happen in Ukraine? They, so they're going to plant more cereals because basically it's easier to get in the ground. They don't require as many inputs. So I think that if we have problems getting adequate inputs or they're really high priced, then that may push us to wheat. However, wheat that's been I think to generate cash, then we're not planting spring wheat. We're planting corn and grain sorghum and soybeans and sunflowers. So I think I don't know that how much that's going to affect us in short run. I think these high prices, we're going to seek to go forward, and then we'll make our decisions on winter wheat once we get off into the fall and any fallow that would be around.
Can you see the other questions there, Dan?
I see from Javier Planinich, any estimation of the available arable land and percentage, 100% being last year for 2023 during the conflict. I don't know I don't know what percentage of fallow they have or of arable land. I guess, Javier, I'm going off of USDA Foreign Ag Service numbers and assuming what that total is. And I could I could dig into that more. So sorry, I don't have a real good answer. I'm assuming that it's as much as they can do, and that ability to reach their capacity this year is going to be constrained.
There were a couple, Dan, that came private message to me that I sent on to you.
Okay.
One is we haven't been able to buy WDG because supposedly ethanol production is down. Is that really what is happening?
You haven't been able to buy DDGs. I need to come back in and recalculate the profitability of ethanol plants. About 2 weeks ago, I'd done that, and distillers and the plants about a month or so ago were making 65, 50 cents a gallon. Then they dropped off to losses of 25 under. Now I haven't. You may be right. I have not heard of reports, and I just may not be up to speed, but I haven't heard of reports of a lot of plant closures. I have seen in the last several weeks that ethanol prices have gone up, but our RBOB prices have moved up even stronger. So of course they're fighting against corn prices that are relatively strong as well. So I guess I'll just have to dig into that more, but I guess I would question until I have evidence that the plants have closed or they're temporarily stopping. I guess I'd seek more information on the availability of DDG supplies. If the plants are operating, I guess I'd want to dig into that more and find out about it. So here you've asked me a straightforward question. I've hemmed and hawed around for about 2 minutes, wondering how to answer it. I guess I'd be surprised if that's the case, but and would want to investigate more.
And then there was another one. Our milo basis has been very strong at times in recent years, presumably because of China. If China becomes the major importer of Russian commodities, how could this affect our local milo basis this fall?
Well, Guy, Allen, and myself talk about this quite a bit. The grain sorghum goes into China partly for domestic alcohol consumption. Guy, would you like to hop in on that?
Yeah, look, I think that milo demand from China is fairly inelastic, and Russia, Ukraine don't produce a lot of milo. So I actually suggest that good premium for milo we've seen above corn should be there in the foreseeable future on that. That said, all that needs to change that is Chinese government needs to change their policy. So it's always a high risk there, but I'm pretty optimistic they're going to continue to demand good volumes of grain, sorghum, and milo, and that the current sort of premiums we've seen in the last 12 months will persist into the future. And that means it's going to be priced out of domestic feed rations and ethanol grind.
And that's contingent on continued good relations between the U.S. and China, and no other conflicts coming in that part of the world, et cetera, et cetera, et cetera. So
I think China needs it. They need it pretty bad.
Yeah. Thank you, Guy.
Dan, one more. Do you have any corn basis info, basis offered to end users?
If I'm understanding the question right, again, the basis information that we've got would be that we really focus on would be at local elevators and at ethanol plants. We have good information on that. When you say end users, would you include ethanol plants in that? Or are you looking at basis at the Gulf or something like that? Can you explain a little bit more?
Matthew, if you could go ahead and just type something in there, give a little more info on that. Yes, either ethanol feed yards.
Well, we have I could pull it up in the interest of time. We won't right now, but we have been having strong Kansas ethanol bids. However, other states have been stronger of late, which is abnormal. Usually Kansas has the strongest top end corn ethanol bids at the plants, but now Illinois, Missouri, other places have gotten just as strong as us. I think, worried about having ethanol supplies. So and generally those basis bids have been stronger or better than at the elevators by 20, 30 cents. So I think I'm guessing that the impetus of your question is, do we still have bids at the plants? We're still getting decent bids at the plants when we're wondering about bids out at the other elevators. That we can look into. I don't have it off the top of my head, but once Glenn starts, I'll look into that and try to answer that in the chat.